Video opens with a shot of a rapidly fluctuating jagged stock chart, glowing red and green. Bold text appears over the chart. The biggest mistake investors make. The market is a battlefield of numbers, a relentless tide of ups and downs. Fortunes are won and lost in the blink of an eye, dictated by the volatile dance of the stock chart. In these moments of extreme turbulence, when the screen flashes red and a sea of downward arrows floods your vision, your greatest enemy isn't the market itself. It's the ancient primal instinct hardwired into your own brain. This is the story of how a single decision, born from fear, can become the most expensive mistake an investor will ever make, and how understanding the psychology behind it is the key to true financial growth. Scene cuts to a close-up of an investor's face, illuminated by their monitor. Their eyes are wide with fear as they watch their portfolio value plummet. The chart is a waterfall of red. You see the market drop, and it feels personal. A knot tightens in your stomach. Every tick downward is a blow, a confirmation of your worst fears. This isn't just data on a screen, it's your future, your savings, your hard-earned capital evaporating before your very eyes. The voice of panic, loud and convincing, screams at you to get out now before it all disappears. It tells you to cut your losses and save what's left. In a desperate, reactive move, your hand darts to the mouse. Your finger clicks, and the screen confirms the action. Sell. A wave of relief washes over you, but it is a fleeting and treacherous comfort. The screen now shows the investor's portfolio, with a large, glaring number in red under realized loss. The scene then fast-forwards. The same stock chart that was plummeting begins to stabilize, then slowly turns green and starts a steep, powerful climb, eventually surpassing its previous high. The immediate aftermath feels like a narrow escape. You've stanched the bleeding, but then you watch from the sidelines. The market, as it has done countless times throughout history, finds its footing. The panic subsides, and confidence cautiously returns. That same stock you sold in a frenzy begins a steady, inexorable climb. First, it recovers your losses. Then it ventures into new territory, scaling heights you had only dreamed of. The red number representing your realized loss becomes a permanent scar on your record, a stark monument to what could have been. The pain of the temporary drop is nothing compared to the lasting regret of missing out on the inevitable recovery and subsequent growth. The scene transitions to an abstract, glowing 3D visualization of the human brain. The amygdala, a small almond-shaped section, pulses with a bright red light. What happened in that moment of crisis? It wasn't a failure of financial analysis. It was a failure of emotional regulation. Your brain's amygdala, its ancient fear center, took control. This part of your brain is designed for survival, to react instantly to threats like a predator in the wild. It doesn't distinguish between a physical danger and a financial one. When it sees the market crashing, it floods your system with cortisol and adrenaline, hijacking your rational mind, the prefrontal cortex, and triggering a fight-or-flight response. Selling becomes the financial equivalent of running from a tiger. This impulsive reaction is a relic of our evolutionary past, and in the modern world of investing, it is profoundly self-destructive. Cut to a different investor. They look at the same plummeting market data on their screen. Their expression is calm and composed. After a moment, they confidently close their laptop and walk away, picking up a book or turning to their family. The alternative is not to be emotionless, but to be disciplined. The successful investor sees the same terrifying data, but has a different response. They understand that volatility is the price of admission for long-term returns. They have a plan, a strategy built not for the best days or the worst days, but for all the days in between. They acknowledge the fear, but do not bow to it. Instead of being glued to the screen, they trust in their diversification, their time horizon, and the historical resilience of the market. They turn away confident that their strategy is sound, letting their plan work for them, while others let their panic work against them. The final shot is a time-lapse of a small sapling growing into a massive, strong oak tree. The sun shines brightly through its leaves. The frame is calm and peaceful. True wealth is not built by timing the market's violent swings, but by enduring them. It's a marathon, not a sprint. Like an oak tree, a strong portfolio grows slowly, its roots deepening over seasons of sunshine and storm. Patience is the soil, discipline is the water, and time is the sunlight. By understanding the psychology of fear and committing to a long-term vision, you can weather any market storm and allow your investments to grow into something strong, resilient, and lasting. Don't let a moment of panic fell the forest you've worked so hard to plant.